So, penalties for improper bookkeeping in Canada. Now, this can be quite extensive. I don't want to go into it too much. So, Section 230, records and books. This is a requirement for maintaining, records and books, at least accurate ones. Every person carrying on a business shall keep records and books of account, including annual inventory. So this is just paraphrasing Section 230. You can check it out yourself. But it is just generally leading on to the next section, which is, so basically Section 230 is you need to do this. Section 238 is this is what happens if you don't do this. So offences and punishment. Penalties for failing to comply, including fines and imprisonment. Every person who fails to comply is guilty of an offence, and in addition to any penalty otherwise provided, is liable. So when it comes to this, you can be hit with quite a few penalties. One of the basic ones is just a fine of $1,000, but this fine can go up to $25,000 for not keeping accurate books and records, and it's to do with Section 230, I think paragraph 1. But also you can go to prison for up to 12 months. So if the CRA do ask for your books and records, make sure you can provide them. So not adhering to that can get you into quite a bit of trouble. And then we come to the Income Tax Audit Manual, Chapter 28. So this is what the revenue officer at the CRA would look at. They would look at Chapter 28 and the penalties section and guidelines on how to apply the penalties to you. And so they'd see by not keeping proper books and records, the taxpayer has demonstrated a degree of neglect. And so it would be their job to apply these penalties that we talked about before, which is like $1,000 to $25,000 based on your situation. So, yeah.
And again, I think we've mentioned this before in other videos, but I would like to reiterate it. Like, negligence is not an excuse, as you can see. Like, even like just because you're not a bookkeeper, a professional bookkeeper, doesn't mean like, oh, but like I don't want to do that, or I didn't know how to do that. That's not an excuse with the CRA.
Yeah, part of the problem that we see with a lot of business owners that are in non-compliance is they say, well, I didn't know that about owning a business. But when you opened your business, it's your responsibility to learn this. We're not being shills for the government here. We're just letting you know that that's how they see this situation. And when you're providing, your tax return, you're making a statement saying this is, to a degree, accurate, and this is how much money I received, and this is all my expenses, and this is how much you should tax me.
Yeah, I think a good example of this would be, let's say you buy a house, you're a first-time homeowner, you have to do some maintenance on the house, but you don't know exactly how, so maybe you hire like a gardener or something like that. Same thing with running a business. It's your first time, opening a business, you have to do your bookkeeping, you don't know exactly how, so you hire a bookkeeper. Like, it's not an excuse that you don't know how.
And one of the things, though, that we see quite a bit is when a business owner is losing money, and just frankly, nearly everyone loses money in the beginning.
Yeah.
Nearly everyone.
I think like 70 or 80% don't make money their first year.
A high number.
Yeah.
And what happens then is the business owner doesn't want to look at the books or the financials or the bank statement because it upsets them that they're losing money. That's the wrong way to go about doing this. So just, if you're in that situation right now, just say, okay, everyone goes through this. I need to deal with this situation. Move forward. And so with the US, it can be, you don't have such clear penalties for books and records. However, they do have these sort of situations here. So Section 7203, willful fail to file, return, supply information, or pay tax. Penalties for willful failure to keep records or supply information. So they can hit you with this penalty if you fail to pay any sort of taxes or file a return or keep any records. And it ranges from just a penalty to, if they manage to prove that it's willful, you're going to have like misdemeanors and very large fines. But again, it has to be willful. So you have to be actively trying to do the wrong thing. I'm not going to get into the definition of willful, but yeah. IRC section 6662, imposition of accuracy related penalty on underpayments. So penalty for underpayment due to negligence or disregard of the rules. So this is imposed when you just like underpay a tax return. So say, for example, you claim something on your tax return, it wasn't actually correct, and then now they're going to institute a penalty on the difference between what it was that you paid and what it was that you didn't pay. And it's generally about 20% of the underpayment, and that will need to be attributable to the negligence or disregard of the rules or regulations.
Also, guys, penalties and interest, like given by the CRA or the IRS, are not tax deductible. Like that,
Yes.
You're just going to eat those costs.
Yeah, it's just something you have to pay. And also on those penalties, penalties can be a little easier to get out of, but interest, you're generally not going to get out of it most of the time. Very special circumstances. We got this in another video, but special circumstances. IRC section 6651, failure to file tax return or to pay tax. So penalties for failing to file a tax return or paid any taxes. And this is just the standard penalties that you see all the time. So the penalty for failing to file a return is about 5% due on each month the return is late, up to a maximum of 25%, and then the penalty for failing to pay the tax on the tax return is 0.5% or 0.5% each month until it's paid, up to a maximum of 25%. The one you want to watch out for, though, which we don't have here, is what would happen if you had bad bookkeeping and it affected your ability to remit your payroll taxes. And that's called a trust fund recovery penalty in the United States, and that's the 100% penalty. So if you do not remit, the $10,000 in payroll taxes, you're going to pay like a $10,000 penalty. So that's just not a nice one. And then we've got here Treasury Regulation Statute 1.6662-3, negligence or disregard of rules or regulations. So that's just a statute outlining some of the rules and why they would apply to this situation. So you can have a read of these if you're interested in what you may face just for having, bad books and records, which lead you to having situations where you're not filing the correct things, or you're not
filing at all.
You're not filing at all, or you're willfully doing the wrong thing, or you're remitting the wrong amounts, etc.